The strategies and concepts discussed are for educational purposes only and do not represent specific investment, tax, or estate planning advice. Investing carries an inherent element of risk, and it is possible to lose principal and interest when investing in securities. No strategy can guarantee a profit or prevent against a loss. The views expressed represent the personal opinions of the presenter or the featured guests, not necessarily those of USA Financial or its affiliated subsidiaries. Any opinions or forecasting statements are subject to change at any time and without notice. John Cyndia is an investment advisor representative of, and advisory services are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. Life Stages Advisory, Dean, and Remington are not affiliated with USA Financial Securities. Welcome to episode 60 of WTF, Wealth, Tax, and Finances. I'm your host, John Cyndia, certified public accountant and personal financial specialist. What we're going to do today is recover from our doctor that we had the last couple of episodes. And
my stomach hurts from the visit.
You should be healthier, though, okay, after that. After speaking about your microbiomes and viral strategies and everything else. So we get back on the track of your finances. Now that you're feeling good, you want to spend some money. But what I want to do today is talk about a lot of these acronyms that are going around. The market's high. What should we do at this point in time? Some strategies and everything, because we are at all-time highs, and everybody's talking about YOLO, FOMO, MAMU, SPACS. You guys got anything else to throw in there?
Diamond hands, tendies,
paper hands.
Let's see. We'll have to talk about that.
To the moon.
To the moon. Oh.
Stonks.
Yeah, stonks.
See, all this stuff is basically driving the market up with a lot of retail investors, people getting in at the last minute. It looks an awful lot like 1999, 2000, 2001, the 2008 crisis that we had, 2013. So we've had a lot of different melt-ups. And YOLO, you only live once, so hey, why not go for it, right? So people are putting money into stocks that really aren't worth anything, pumping and dumping like we talked about in a previous episode, going up. Anything you put your money into, you're making it. So don't mistake a bull market for intelligence about the stock market. In other words, like they say, a rising tide lifts all boats. Well, all the markets are up. You could put money into just about anything right now, and it has been going up. But after 11, almost 12 years of a market that's gone straight up, I think we need to start looking at it, that taking some profits, reallocating, looking back at your portfolio. Well, you only live once. People are coming in and finally jumping on the bandwagon, putting money in on just about anything, and a lot of it's risky. And the SPAC, the Special Purpose Acquisition Company, is one of those things that has no real operating ability or anything. It's not a company that does anything but attracts investors so that they can look for a company to purchase or buy out. So it's a lot of equity managers, hedge funds that are going into these, and they're just opening it up, have no idea. Like they say, it's blank check companies is what they're calling them. So they're just dumping money in and saying, hey, don't worry about it. Put your money in. We'll find something and we'll make money at it. So a lot of people are putting their money into something like that. And, when you start looking at it, it's where we're at with the market right now. It has a lot of potential for abuse and everything.
So that, excuse me, that's, what is it, Special
Special Purpose Acquisition Company, a SPAC, yeah.
So are we kind of saying that that's like in a way like a ghost company? Like it's just a put your money here kind of thing, but they don't really exist?
No, it'll exist, okay, but it's specifically for the purpose of acquiring funds to go out and purchase another company. It's like a streamlined IPO. Okay. So they're going to turn around.
I'm going to put it in terms that I can understand.
So okay.
It would be like all three of us are putting our money here, to purchase a company.
Exactly.
So really, in terms, it's not a company, but its purpose is to purchase other companies.
Right. But what they're doing is allowing a lot more people, because depending on the structures, you might have limited investors depending on what type of a company or setup you're going to have as an entity. So when you're doing something like this, they're going to register and more than likely look for some other type of a company. They're not getting tens of thousands, they're getting billions of dollars, hundreds of millions of dollars. So they're looking for legitimate companies, but that's the intent for these. So instead of having
how do
to
they
go
get
through an
investors?
acquisition,
How do they get investors involved to spend so much money? Do they say like what type of company they're looking to purchase?
they might.
Like,
you
do
know,
they have specifics or?
They can have specifics as to what they're looking for. They might want a finance company, they might want a manufacturing company, but a lot of these are just going to say, "Hey, don't worry about it," and that's
Just put
that's
your
what I'm
money
saying.
in, we got you.
That's why I'm saying, there's so much money on the sidelines, and everybody wants to make something, and we're at the top of the market, that it's going to be a free for all, and it's allowing for a lot of that stuff. You won't know till the dust settles. That's the problem. When you're at the top of the market like this, you see people coming out of the woodwork with different ideas and things to invest in, and that's all I'm saying is just beware, because while you're putting that money in, that's all speculation. So if you have the money to lose, put it in. That's up to you. If you're looking long term, and long term is 3 weeks from now, like we were talking earlier with Rem, we were talking about one
My
guy's
long term is crypto. Let's go.
yeah, his long term plan was cryptocurrencies, and I'm like, oh my god. So
It's not me. It's somebody I know.
yeah.
It
So
might be me.
but anyway, you guys ain't learning nothing from these things, are you? So anyway, beware about the SPACs. Do your due diligence as always, and make sure that you put a little bit of sweat equity into seeing exactly what it is they're investing in, and make them give you some specifics on that. FOMO is the fear of missing out, which is also in here. Everybody's jumping on the bandwagon now at the end, and I do really think that we're coming to the end of this bull market in a sense that we're going to have a major pullback. Okay, not that it won't keep going, but for people who can't withstand a 30 to 40% pullback potentially within the next 1 or 2 years. I mean, I think everybody got spoiled last year when we pulled back like 38%, and within 2 or 3 months we were almost back. And
a short enough amount of time for people to go,
exactly,
I can stay.
I can withstand that.
Yeah, but if you're talking about a pullback that's going to last months and months and months,
it
might be a different story.
If you're within 3 to 5 years of retirement, you may not want to try and ride something else out. It could be prolonged. Now all of a sudden you see some of the markets they're pulling back. We had 300, 400, 500 point pullback the last few days because the bonds were going up. And bonds going up, usually the market's going to take a tank on the, reversing that. And I think with so much turmoil in the financial markets, with the bond sector and the stock markets at all-time highs, and then you see cryptocurrency has pulled back quite a bit this last week. So you've got something happening, and as the markets are starting to test resistance, they can't get beyond certain limits and everything. And right now you've got the Dow at around 31,000, you've got the NASDAQ around 13,000, and you've got the S&P around 3,800. They're all within a few hundred points of their all-time highs. So, they've been banging around up here for a while now. And I think what you need to do is just be aware, because you hear this MAMU thing, and it's the mother of all melt-ups, is what another term you'll hear. And that, again, goes in with the market melt-up, with everything happening. There isn't any bad news, but everything's still going up. And I think you just have to be aware, because the last few days and stuff, we've been taking money off the table. We've had gains over the last year and a half on industrials paying dividends. And, we've had stocks that have gone up anywhere from 50 to 150%. And that's not normal for an industrial type stock. I mean, we're not talking, anything that's going to the moon here. We're talking just staples. So whatever, going to the moon, Alice, I guess is what you guys.
Are you up on your Reddit terminology, John?
Yeah.
Yeah, if you're on Wall Street Bets at all, every stock that they get involved with, they want it to go straight to the moon.
Exactly. So we're not. Reddit isn't. Not everything goes to the moon, even though they think that it will. Yeah.
But Elon Musk said it was going to go to the moon.
Yeah, I know. He might go to the moon. I don't know. That'd be about it. But what you want to do is look at taking some profits, reassess your risk level and your tolerance, because if you're looking at something that you've already made a ton of money in, start pulling some of that or all of that off. There's nothing wrong with that. And I'm not saying that this pullback is going to happen within the next week, 2 weeks, a month, or whatever. It's just the fact that, we've been looking at this for a while. We had a pullback, like I say, last year, but it came back. I think it was the fastest comeback for stock markets in the history to come back from that far down so quickly. So even though you would look at it as just a little point in time, it hasn't been prolonged. We haven't been in a recession. There's more government stimulus coming, a couple more trillion. So all of this stuff, the markets have been buoyed up at these heights, mainly by all that cash flow coming in and the government influx of money. So a lot of this is propped up artificially. There's still hundreds of thousands of jobs and millions of jobs that have been lost. Last count, there was 250-some thousand businesses, small businesses that went out last year because of COVID that won't be back. They're still looking at restricting people and access from a travel standpoint, from restaurants. They're starting to open up, but we still have issues along those lines. So we're not back to normal yet, and it's going to be a while. But with all the government regulations being still intact, and people getting antsy about wanting to do things, traveling, spending money, doing different things, it's just a difficult time. And while we haven't been here before, I'm sure we're going to weather that. But I guess what I'm saying is there's no reason to just follow the market all the way up and all the way down and wait till it comes back in and just go up and down. There's nothing wrong with taking profits, because if the market does pull back, and when it does, then you can get back in again, similar stocks, same stocks, other stocks that may be on a rotation from a cyclical standpoint or whatever. You can get back in and almost make a value play out of it, because if a stock is at its all-time high or near-term high, and it goes back 10, 20, 30%, it's obviously a better time to buy it, especially if it's a good, solid stock. So there's nothing wrong with taking profits now, waiting a while. Could be a couple months, could be 6 months. I don't know. But I know that when you have several $100,000, like a lot of the clients do, in gains, nothing wrong with taking that back. Why would you, hold them and lose 30%, 40% on the downturn, and then turn around and wait for it all to go back up? It just doesn't make any sense to me on a seesaw base. So in order to do that, you have to diversify, sell some of the stocks, take some of the profits, reallocate, wait, and reassess. I think that's what needs to be done. Have you guys thought any thing about? I know we were looking at some of these stocks that were going crazy, like you said, going to the moon and all this other stuff, but having like a limited investment experience at this point. What have you found out that was good for you or bad for you over the last month or so?
I would say getting in on all the Reddit craze.
Mhm.
Yeah, that
at one point,
screwed me over.
they were. I mean,
A lot
even
of people got screwed.
Yeah, even the normal media was calling calling Reddit stocks.
Yeah.
So without naming any specifics, you guys know what we're talking about.
Yeah.
Yeah, I mean, me and Rem both played in some of those Reddit stocks.
Yeah.
And honestly, what I found is
I didn't have an exit strategy.
no,
That was my problem.
no, I didn't have an exit strategy. My exit strategy was the moon.
Exactly.
I was on the first off on the fear of missing out.
Yeah.
Oh yeah.
So
Yeah.
I'm like, I need to get in here and play, and I need to get more money in, and I need to throw everything I got at it. And we talked, John. I did
Sure.
make profit on it.
Oh,
I
yeah,
pulled out
yeah.
good. But I mean, you know, in the end of the day, playing those kinds of stocks and having a full-time job and going to school and being busy,
Trying to
You
day
have-
trade at work.
you have to
Yeah.
stare the volatility of those stocks. You have to stare at it all day long.
Yeah.
You have no choice. Otherwise, you're going to miss out on a fat gain, or you're going to watch it drop hard or hope you pull it out before it dropped hard.
See,
Yeah.
I was at work and I had to go. I had my phone and my work computer. I had the ticker and everything pulled up.
Mhm.
And at one point, I just had to actually go do work for something. I got up and I came back and I was like, oh, let's check and see what happened. It dropped.
Yeah, and it's bad because like Rem, he's kind of out and about at his job. Like I sit at a desk all day, so I had it up on one screen and I'm just staring at it all day long. I have nothing else to look at. So I'm staring at this stock all day. I got like 5 people I have to text if the stock drops hard. I texted you.
Yeah.
I had a couple other buddies that I texted. It was going back and forth. I'm scrolling through Reddit, and I'm looking and seeing what the updates are, what they're going to do next. And I'm like,
His boss called, sent straight to voicemail.
yeah, I'm like going crazy over making a couple $100.
Mhm.
And to me, that's not worth it.
No.
So these stocks go back up. I'm like, I just watch. It's
Yeah.
cool. It's cool. That everybody's, making some money, but
Well, and I think, the good thing about that is that even though it's only a few $100, the good thing is it's only a few $100.
Oh, yeah.
right.
Because, some people are doing thousands and tens of thousands of dollars and dumping all kinds of money in and taking loans out. I've seen some of these guys and they said, oh, geez,
Well, like,
I'm out $70,000. I'm like,
if
what
you
are
got
talking
if you
about?
got a good portfolio, like a couple of the brokerages they'll loan you money, a lot of money too, a lot.
Oh, yeah.
It's not like $1,000, like 25 grand, 50 grand, depending on your portfolio. Which,
Yeah.
if you do that, you do you, boo boo.
Yeah.
That's all I have to say.
You see, with all the stuff that was going on, like I think me and Dean got in pretty early with the nameless Reddit stock here.
Yeah.
At like, I think I got in
They,
at like
the
60.
video game retailer.
Yeah, those guys.
Yeah.
Yeah.
But I think I got in at 60, and the next couple of days at work, one of my buddies comes over and he's like, "Oh man, I'm feeling good. I just bought in at like, I think he bought in at like 3 something."
Oh yeah, yeah.
And
Oh,
like
300.
yeah, like an
Yeah.
hour later,
It drops
it
down to like 180.
tanked. And he's looking at me. He's like, "I thought it was just gonna keep going up." I'm like, "Did you look at any of this stuff? Have you been following what's happening at all?" He's like, "No, I saw the stock and I bought it." I'm like,
Yeah, some of the
Buddy.
comments, I was looking at some of the comments. These people, man, they're taking up airspace because they don't
They're,
have a clue. These
oh,
are some,
yeah.
the lights are on, but nobody's home. I know some of those.
They're cut from a different cloth.
Oh my God. I sat there and I said, you can't be that stupid. It's like, what are you thinking? Well, man, I
Everybody's
went
making
into
money.
this stock and it's supposed to go
Tendies.
up, and I was
I
told
want the tendies.
I didn't think it was
Tendies.
going down, man.
John's a paper hand.
Well, stocks only go up though,
I'm,
right?
I'm a paper hand.
Yeah,
Oh, yeah.
you're a seller.
Oh,
Me and Dean are diamond hands over here.
Yeah, except we're not in it
Nope.
anymore.
oh, yeah.
Yeah.
But one of the other things too is I started to look at like just diversifying everything and
Mm-hmm.
not getting into just one specific thing. Like I think we talked about getting into crypto. Like I've got a little bit in that.
Mhm.
I've got some stuff in some minor pharmaceutical stuff. I've got just some tech stuff going too. And before this, I would have just found one thing and just dumped all that into it. But
Oh, yeah.
spreading it out more has worked out a lot better for me in the long run.
Yeah. Yeah. I had a couple clients we were working on yesterday that had pulled some major profits out. And what we did keep in, I mean, there was industrials, there was finance companies, there were energy companies and everything. And what we kept in was some gold and silver. We left that in there. We had some bonds exposure in that, and a few smaller mutual funds that we didn't have a whole lot in. And but we took substantial gains out of that. It was in an IRA, so we didn't have any tax consequences. But when we started looking at it, and I was telling them that it might be something to start waiting and reallocating, we kept a few stocks that he liked, and then we got rid of the rest of them. But we had gains in there that it sort of blew me away for some of the industrials that we had, and
because that's something you don't really expect
to
jump like a tech stock or something, something like that.
Yeah, you're looking at a major manufacturing company that he had $30,000 and it was over $100,000,
right?
And we're looking at 14 months. So this market has gone up, almost a parabolic increase on everything. And when you start looking at that, you see these charts, and they're almost directly straight up in the last 6-8 months. So it's nice, but it's also scary. That's the same thing I'm doing, with my investments is, starting to rotate, take some profits off and look at it and saying, okay, let's reassess. It's because, like when you were saying you wanted to get in, that fear of missing out, all that emotions was getting you guys in and say, oh my God, let's see what's going on. And then, you get burnt because you're in toward
It's so funny because that's one of the easiest way to target younger people.
Oh yeah.
It's just the fear of missing out.
Yeah,
so.
Exactly. And that's the thing is it's so easy to get in with some of these apps anymore that,
you don't need any knowledge.
No.
You don't need to know anything. All you need to know is what the ticker symbol is.
Well,
you know what the ticker symbol is and you know what money is, you can get in.
Well, exactly. And that's the thing that, a lot of the younger people, there's older people too, but a lot of the younger people just figure, I've learned everything on the internet. I am a brain surgeon. Well, maybe I'm not, but I did stay at the Holiday Inn. I did stay at the Holiday Inn Express.
I used to watch Grey's Anatomy, John.
Yeah.
So I know my stuff.
Exactly. My point, exactly. But like I said, I stay at the Holiday Inn Express. I can do anything. I can drive a truck. I can be a brain surgeon.
Wait, they got YouTube videos for all that.
Exactly. And it's like, well, why not just buy this stock? Everybody else is in it, but everybody else got in it, when it was way lower.
Yeah, when it was $4 a share.
Yeah, it's not 220 in about 6 days. So, yeah, that's the type of stuff that we're saying, just you got to get back to common sense. A little bit of rationality goes a long way. And, long term is not a month. Long term is 5-10 years or more. I've got some clients that when I was looking through their portfolios, they've got gains that I'm looking at this stuff. They've had it since 1995. Well, it's a great dividend play. And it's gone up hundreds of %. There's no reason to sell it, to take profits. It's working what it needs to do for the dividend. And you're not going to get it, at a bank on interest rates or anything like that. So that's exactly what that stock's going to do. And they've just had it for a long time. So there's absolutely no reason to do that. In a market like what we're doing here, when you're getting that much growth, and these people I'm talking about are in their 50s, we don't need the dividends right now. Plus, it's in their IRA, so it's not going to matter. It's going to be ordinary income anyway. So, when we look to have some of these things placed, these were stocks that we had an advantage of. They were sort of a value play at the time because they were down low, and we bought into them. They were solid companies, and then they just went crazy.
Yeah, my grandfather, he bought me and my brother a couple of shares of a big time stock back in like 1999. I was 1 year old.
Oh, okay.
And he bought us both 5 shares each, and he paid like, I don't know, $20 for 5 shares, so $40 total, something like that.
Mm-hmm.
And ended up later on, I was like, I'm gonna sell this. It was worth like almost $500. Yeah. So, and like he's. He actually just passed away a couple months ago, but he was big into the stock market, big into playing, making quick gains, and he had a lot of long-term plays. So, after I sold it, I didn't really, I didn't feel bad. I was like, he would be happy that I, turned over a 25,000% gain on,
Oh, yeah.
on his initial investment.
Exactly.
So, but like, when it comes to like these fear of missing out stocks or these quick gain stocks, wouldn't necessarily, it probably sounds like we're kind of, taking a dump on them a little bit, but we're not,
Yeah.
it's all what you're willing to lose. And if you get excited over that stuff, sure. Like,
as long as you have fun.
Yeah. I mean, like,
Yeah.
if
At the end of the day, I'm broke, but I had a hell of a good time.
Yeah, like that's what I said about like going to the casino and stuff. And like, I'm not like a gambling addict or anything by any means, and I'm not trying to endorse it. But like, if you're having a good time and you lose $100 or $200 and you're willing to lose that, who cares?
Yeah.
But if you're betting the house and we've said this
If
before,
you're putting on like a second mortgage on the house, just
and you're putting all your
buy the
savings in,
stonks.
and you're trying to make a massive gain. This isn't for you.
No.
You should probably find a job that you can make a lot of money at or something.
Yeah. And see, that's the whole thing is, and I've got clients. I had some tax clients came in the other day and they inherited some money. So we sat down. They've got money pretty well diversified, but there was no plan. It just sort of happened by accident. And because of that, now we got to put it together. So we're going to sit down and do a plan. And the one spouse was saying, "Oh man, I'm really aggressive. I want to do all this." I go, "I will give you," now this is their money, "I'm going to give you a little money to play with." And he's looking going, "How much?" And
Like
I
giving
says,
him an allowance.
"I'm not sure." Yeah, exactly. I said, "I'll put you on an allowance." I said, "We'll agree on it and everything, and you can go do whatever you want to do with that
If you do your
thing."
chores, then I'll give you more.
Yeah,
And
they're
she-
like, "How do I turn my $1,000 into $1 million in 10
Exactly.
days?"
Yeah,
You're not
she
gonna.
she was excited in saying that, and I just sat there and she goes, "Oh, I'm kidding." She goes, "I have no idea what I'm doing." I said, "If you want to take a flyer, we'll put it off to the side there. That's up to you." But I said, all the rest of this stuff is going on the shelf, and we're going to do something. Okay, because we don't know what's going on. But they did have a diversified set of assets, which was good a hell of a base to start with. But it was just hilarious when she went, "I'm going crazy," and he's going, "I'm pretty conservative." So it's like
Literally the
they're
opposite.
fighting. Yeah, they're fighting back and forth. I'm
Oh,
like,
boy.
oh my God. So I said, "Yeah, I think a plan is good." And the funny part was that their son is with a major discount broker, and it was funny that they were talking. He says, "Oh, he wants us to buy this other stuff. He does pretty well, but it was something different." It's like, I said, "Well, we might not get into that right now." But so yeah, if you have anything that you're looking at, you need to just take your time. Don't be emotional about it. And what I talked about before was, diversification, allocation amongst different types of industries, different types of, whether it's stocks, ETFs, mutual funds. If you're looking at any bond exposure, fixed income, something like that, just make sure that you got a good solid base. You got value opportunities. And if you do have some speculative stuff, just allocate a piece to it. That's all. It's just like gold and silver. I mean, when we look at that, we're not putting more than, anywhere from 2 to 3, 4% probably allocating. We're not looking at 40, 50% of anybody's portfolio to go into anything like that. So you just have to be, common sense, rational, and, put a good thought into it. And to you guys, getting excited and seeing what it does, even on a small base, is better than not doing anything. And then trying it the first time and putting in 10 or 20 grand and then going, "Oh my God, what was I thinking?" Hard to earn the money.
Baby
So,
steps.
Exactly.
$100
Exactly.
at a time. $100 a day.
Yeah.
Hey,
That's what I've been
you
doing.
put 200 grand in at once. Be my guest.
Yeah.
But I'll tell you right now, if you're putting that into something that's speculative or super highly volatile,
Yeah.
Good
Branson
luck.
Branson
Good
may do
luck.
it. 200,000 is
Yeah.
like pocket change, right?
yeah, shouldn't even bend. If he dropped that on the ground, he should just leave it.
Yeah, not. Maybe I gotta start following him around. I don't know. And get arrested being a
Maybe
stalker or
Throw
something.
100 and something.
Yeah. But
They're fun coupons.
yeah. So I hope this has been informational and helpful for this episode. I want to thank you again. Rem, what should they do?
Oh, buddy, they should like, subscribe, share with as many people as they possibly can, hit the notification bell, email you at jcindia@lifestagesadvisory.com if they have any financial questions. Leave a comment on the YouTube video. Let us know what you like, what you don't like.
Yep. See, boy,
Yeah.
he's
If
got
you're
this
on-
down.
if
This is
you're
what I'm
on
supposed
the-
to say.
If you're on the podcasting platforms,
Oh,
please
leave
give
a
us a
review.
follow, or maybe if you're on Apple iTunes, Apple Podcasts now, I believe,
We don't have a
you
whole
can
lot
leave
of
a
those.
review if you'd like.
If you're on Spotify, give us a second listen on Apple.
Yeah, we will bump the numbers, right?
Oh,
Is that what
yeah.
it is? Is
Oh,
that what
yeah.
it is? Yeah, because after we got through with our grandparents and our moms and dads and
Yeah,
stuff,
it's just
but-
Rem. All our views are Rem
yeah.
playing the videos over
I've
and
got
over.
5 different computers running it just on a loop.
Instead of mining for Bitcoin or something like
Mining
that,
for views.
he's mining us for views.
Oh, Lord.
So, yep. If you're not listening, thank God you're not listening, I guess, at this point. But we want to thank you again for tuning in and hope you're enjoying everything. And we'll see you next episode. Thanks.